Day period. The Dow breached 20,000 to little fanfare compared to the 10,000 marker. And we did end the week near record highs, but on the day, kind of meh. They just hung around the unchanged line.
Meh is a really good word for it. Nothing happened in stocks today.
Well, if you dig inside and look at the sector performance, come inside the Bloomberg. This is GRR1 Go on the Bloomberg group ranked returns. You can see healthcare and telecom and tech were the only gainers. And, of course, lots of tech results for investors to parse through there with Google, or I should say Alphabet, reporting yesterday along with Microsoft and Intel. Energy shares, the big laggard here, off by 1.1% as a group. Some of the names there that we're keeping an eye on: Chevron reporting its first annual loss since at least 1980. We're talking about a deficit of $497 million for the year. Spectra, I was thinking Southeastern because the ticker's SE, but it's Spectra Energy off by 3 1/3%. That's the most in 11 weeks, or at least at one point it was. The head of FERC resigned, so that could mean delays in pipeline approvals. That's how investors are interpreting that, so the stock declined there. And Juniper, down as much as 10.2% in trading today, certainly came off its lows. First quarter adjusted earnings per share outlook missing analyst estimates.
Let's look at government bonds, starting with U.S. 2-year and 10-year. Not really much going on domestically, down a little bit on yields. But check out what's going on in Greece. Significant move higher in Greece 2-year yields. The last thing probably people feel like they want now is to have to start worrying about Greece again. Yet again, however, there are stalls in negotiations about unlocking more money. Traders are getting nervous. I don't know. Usually these things get smoothed out, but pay attention to Greece. Very significant jump, 0.7 there on the 2-year yield. So keep an eye on that one.
Maybe rearing its ugly head. All right. In currencies, the yen weakened for a second day versus the dollar and the euro. The BOJ stepped in to buy debt. Remember, it's targeting the yield curve now. It's trying to contain the rise in the 10-year yield. The Mexican peso is the best performing emerging market currency today and for the week, testing that 21 level. It got there and then backed off. It ended this week with its first weekly gain since December 9th. And, of course, we know that President Donald Trump and Mexican President Peña Nieto talked by phone after they canceled their meeting jointly or unilaterally. That's still under debate. White House also walking back that 20% import tax is one option to fund the construction of the wall. And the Turkish lira, we're keeping an eye on this one. Another record low. This comes as Fitch gets ready to hold its credit ratings review. The question is whether a downgrade of Turkey will come, because Fitch is the only major ratings company to rate Turkey at investment grade. We know the central bank has been tightening liquidity to support the currency, as President Erdogan has warned against raising interest rates because he says that would adversely impact inflation and the economy.
Finally, on commodities, not a whole lot doing. The big gainer today was silver, shooting up in the middle of the day, gaining 1.7%. Gold, oil losing, but you see West Texas there still above $53 a barrel. Not a lot of change there. That hasn't moved in a while, and gold basically flat. So another fairly quiet day in the commodity front.
Those are today's market minutes. We are awaiting President Donald Trump at a ceremonial swearing-in of the new Defense Secretary General James Mattis. You're looking there at a live shot at the Hall of Heroes at the Pentagon. We will take you to the live remarks when it happens. In the meantime, joining us now is Bloomberg's Guy Johnson, who is at the White House and has been tracking the Theresa May visit to the White House, and GAM Investment Director and Fund Manager Paul McNamara. Guy, let me start with you, because on this day that we were anticipating, that certainly the UK had been anticipating, talk to us about the context and the reality of this quote-unquote special relationship that the U.S. and the U.K. share, because on Twitter it was noted that Sky News was wall-to-wall coverage of Theresa May in the U.S., whereas it was not even worth a mention, really, on Fox News until the news conference.
Yeah, I think the UK always likes to perceive this as being a special relationship, and it's certainly very notable that you do see a spike in coverage of the special relationship at the beginning of every new president's term. So, yes, the UK likes to get in early and talk about the special relationship. I think what Theresa May delivered today was a conversation with Donald Trump about how to maybe think about the security architecture of the world, to go out there and get engaged with NATO, with some of the other big international bodies that exist out there. And apparently now the president is 100% on board with NATO. It's going to be interesting to see what the new Secretary of Defense has to say about that.
100% insofar as he didn't challenge that statement when she made it.
Paul, Trump has been the president for 1 week. Extraordinary, busy, long week, it would seem. As a fund manager, what's your takeaway from the first week of the administration?
We've really got to get used to some new rules. Certainly new rules for the developed world. It actually looks a bit more like emerging markets. So, you know, we had the Mexican peso the other week. One of the reasons it rallied was, you know, on some reports that Mr. Videgaray, who's one of the senior Mexican finance officials, is close with Jared Kushner, you know, Trump's son-in-law. There's, you know, and then there was a report that JP Morgan just sent out counting the number of tweets that Trump has sent out about trade policy versus the number he sent out about fiscal stimulus and Obamacare, with the result being that obviously trade policy is a priority. But, you know, this is not normal.
This is not normal, and everyone's adjusting, including the media as well, Guy, as we were talking about. For Theresa May and for the UK, what would qualify as a success for her? Does she go home feeling that this was a successful trip and a successful conversation with the new president?
I think she probably does, yes. It was a very short press conference. That was interesting in itself, given the kind of week that we've had. But I think she probably does walk away with some degree of success under her belt. She did get the president to commit to NATO, or he didn't disagree with her when she said that. They talked about trade. It gives her the ability to go home and say that there are other options, that when she talks about the UK being able to trade on the global stage, well, the United States is a friend. She announced that there was going to be a state visit, that Donald Trump, the president, will be visiting the United Kingdom. So I think, by and large, it was a successful trip for Theresa May. Be interesting to see how the Europeans react over the next few days and whether or not they regard her as some sort of beachhead into this new administration, or whether or not they see her as being the exact opposite, i.e. walking away from them and towards the United States.
From the UK perspective, what's the view back home of when this kind of appearance for Theresa May? Are people enthusiastic, or are they skeptical? What's your sense?
We're very split at the moment. You know,
right.
There's the Leave camp and the Remain camp, and I think, you know, the Leave camp are very much very enthusiastic about Trump. He's got a lot of the same agenda as them. He's pro-white people, shall we say. It's, you know, there's an awful lot, you know, not great about integration into the world, not keen on globalisation. So the idea that, you know, that we can get a trade agreement done quickly in the US, although, you know, if you talk to anybody who actually knows about trade, that's a bit of a fantasy, is something which is
There was
played
a
up
story
in the media.
this week about any potential trade deal between the UK and the US being stymied by lack of negotiators on the US side, on the UK side, to even go down that route.
Well, I mean, this is the problem, is that most experts are on the Remain side, so it's actually quite hard to get people lined up to negotiate deals. Plus, most of the UK's trade arrangements at the moment are through the EU, so the negotiators are in Brussels rather than London.
Guy, do we know if it's true that until the UK actually leaves the European Union, it's actually legally barred from entering a trade deal with any country? So whatever agreement the UK makes with the US, it would be actually fairly symbolic and not have that much of a big impact on the economy, because they can't do very much until the UK extricates itself from the EU.
Well, theoretically, the UK can't do anything until it exits the customs union. That's the critical part. Now, you could sign a deal the next day after that. So, in theory, you should start negotiating at that point. But let's be realistic here. Negotiations, in some ways, started today. They'll start at a very vague level. They'll go on from here. The UK can't officially do this. But as we all know, the rules are there to be maybe bent a little bit, despite what the French say.
All right, Bloomberg's Guy Johnson at the White House, thank you very much. And Paul McNamara, GAM Investment Director and Fund Manager, will be sticking with us. We're going to talk Russia and other emerging markets next. This is Bloomberg.
Emma Chandra. Let's get to First Word News this afternoon. IMF Managing Director Christine Lagarde says President Trump's plans to overhaul the tax system and increase infrastructure spending should accelerate growth in the US economy over the next 2 years. Lagarde said it's too early to predict how Trump's other policies may impact the economy. Cyber terrorists could be planning to undermine elections in France and Germany. That warning today from the European Union. With the nationalist Marine Le Pen in the running to become French president and Chancellor Angela Merkel fighting off anti-establishment forces as she seeks re-election in Germany, the EU says it is vital that governments shore up defences against online threats from states and rogue cyber gangs. And severe weather in the southeastern United States has claimed another victim. Officials in southwest Georgia say a 77-year-old woman has died from injuries she suffered when a tree fell on her home last weekend. At least 21 people are now confirmed dead after the outbreak of tornadoes and powerful thunderstorms in Georgia, Mississippi and Florida. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg. Scarlet.
What'd you miss? President Trump will be holding his first official call with Russian President Vladimir Putin tomorrow. Trump had said it was, quote, very early to discuss whether sanctions against Russia should be lifted, but investors are not waiting. They're piling in. Take a look at this chart on my Bloomberg. It looks at weekly net fund flows since the U.S. election, and investors piling into Russia there. There's that latest, most recent data point. It's certainly been the case over the last couple of weeks. Still with us is Paul McNamara, GAM Investment Director and Fund Manager, usually in London, but joining us in New York today. Paul, when you look ahead as an investor looking at EM, what kind of conversation should President Trump look to have with Vladimir Putin to make that country a more investable location for you?
I think there's zero chance of Russia becoming a more investable location. You know, the Putin regime likes things the way they are. You know, that they have a huge amount of control, that they can pick off companies, allocate them to the people they want to run them. I mean, as far as we can see, the instructions are really going the other way. It seems, you know, very likely, for example, that sanctions will be lifted very soon. I mean, we've heard talk about maybe some sort of big picture missile treaty, but our best guess is that we're going to see sanctions lifted and not much going the other way.
You mentioned in the first block that what you're seeing in the U.S. is fairly familiar to you as someone who's followed EM, that some of the political shifts here are more characteristic not of, of emerging markets. So walk us through what that means. This is old stuff for you. What are some of the things that we should be looking for down the road as the EMification of U.S. politics happens?
Well, what we try to look for in investors, and what the rule has been in the past, is keep things predictable, have principles and rules. Whereas what you tend to find in emerging markets is it's much more ad hoc. You know, that if you want oil prices lower, you instruct people to lower the oil price, or you have very, tightly targeted changes in subsidies, or you have companies that you control to move around. It all becomes, ad hocery, I think, is kind of the nature of it. I mean, generally speaking, actually, EM has been going the other way. That with a couple of exceptions. That if you look at Poland, if you look at Mexico, if you look at Brazil, most countries have been becoming more transparent, more principles governed. I mean, you've got the Philippines, where the president has, I think, been accused of feeding people to crocodiles. As kind of the extreme. You've got Turkey, which I think has just been downgraded. But broadly speaking, it's almost a step back towards the 90s that we're seeing, and I think the key here is, very specific targets to achieve, in a way, headlines rather than principles to run the economy.
And I'm glad you bring up Turkey, because the Turkish lira is declining. It was already at a record low, but it was declining, or took another leg lower in terms of value after Fitch lowered the rating of Turkey to junk status. Fitch was the last holdout in terms of rating Turkey at investment grade. So there's the Turkish lira spot. There's the leg up for the dollar versus the lira.
When do things turn around in Turkey?
Not soon. I mean, we would say that Turkey looks like an accident waiting to happen. It's got all the classic, huge amounts of foreign debt.
What does that mean, accident? Is that a specific term of art? What is that? Okay, because it looks pretty bad if you look at the Turkey. What crosses over from bad to an accident?
Well, where the currency's dropping 3 or 4% a day, where you have bank bankruptcies, maybe not in Turkey, but a threat to the sovereign creditworthiness. It's a very serious event, which just where things spill over from finance to actually affect the.
Does Erdogan have any policy levers at this point to stop that?
Yeah, and he's very keen that they not be used. I mean, I think the overwhelming feeling is that Turkish interest rates should be much higher, but he's on record as saying that, well, if you look around the world where you have high interest rates, you have high inflation. Therefore, higher interest rates cause inflation. And it's very hard for the central bank to act on that. So what they did this week was that they kept their main rate unchanged, which was a disappointment to the market, one of the reasons for seeing the sell-off. But they raised the ceiling for interest rates, which allows them to squeeze rates higher, but then they can go and tell the president, we didn't raise rates. So there's a comic aspect to it.
It's all a game, right? I mean, it just becomes semantic.
Well, yeah, it's a game, but it's people's livelihoods, and it's, that there's companies which are suffering from higher interest rates, from the crashing, a huge amount of foreign debt, so the crashing currency is very bad for people.
You mentioned transparency earlier on and how some EM countries are more transparent now than they used to be. When I think of emerging markets, I think of how sometimes we don't get enough information from them, right? There's murkiness, there's opacity. Yep. With the Trump administration, that seems to resemble emerging markets sometimes. There's too much information. There's information flying around all over the place, and they distract people. Something silver and shiny over here, something gold and shiny over there. How, as an investor, do you parse through that? Do you strip out the noise?
We're learning by doing. I mean, we're only a few days into this administration. There's an awful lot changing. We haven't seen, how much influence Mr. Ross will have, Mr. Mnuchin, the buzzword I've heard is adult supervision. Is there any adult supervision within the administration? The one key thing is that they need 60 votes in the Senate, so to, for example, rewrite the Federal Reserve Act, so that there are certain breaks. But it's impossible to say, and I think, that just means uncertainty, and when you get uncertainty, people are cautious.
You had a great quote. I want to go back to Russia because I just found this quote that you were quoted in a Bloomberg story the other day. It says, until we have evidence to the contrary, we'd work on the basis that Trump is in Russia's pocket. We think sanctions will be lifted soon. Russia aside, you already talked about how you didn't see that as investable. If, as you think, Trump is in Russia's pocket, what does that mean for emerging Europe, the sort of countries that perhaps are in Russia's sphere of influence?
Well, it's defining what is Russia's sphere of influence. I mean, Russia thinks its sphere of influence kind of reaches out to Germany, whereas NATO kind of goes right up to the border. There's huge concern in the Central European countries, and especially the Baltic states. I mean, obviously, you have Russian troops in Ukraine, and also the Middle East, I think, and that's probably going to be more of a target, we think, for the Trump administration. We've seen no indications at all that the Trump administration is in favour of the recent expansion of NATO, that it sees that it has a stake in kind of stabilising Central Europe.
Theresa May's word for it.
Well, yeah, quite.
So as we await all these very important elections across Western Europe, do we just presume that Russia will influence or attempt to influence those elections the way that it is accused of doing so in the United States?
I think that's very likely. I mean, we've seen things like Breitbart, which whether or not you regard them as it's all part of a group who have very common values. That they're expanding into France, they're expanding into Germany. We're beginning to see WikiLeaks begin to comment on Merkel and so on. So I think, not necessarily specifically Russian, but that whole group, I think, is going to try and influence European politics.
Paul McNamara of GAM Investment, thank you so much. You're going to stick with us because we have more to talk about with you. In the meantime, there is a live shot of the Hall of Heroes at the Pentagon. President Trump making his way over there. There's going to be a ceremonial swearing in of the new Defense Secretary, James Mattis. From New York, this is Bloomberg. What you missed, President Trump posting a joint U.S.-Mexico statement on his Facebook page just moments ago. And there it is. And you could see that I want to point out one specific part of it with respect to payment for the border wall. This is according to Donald Trump on his Facebook page. Both presidents recognize there are clear and very public differences of positions on this issue, but have agreed to work these differences out as part of a comprehensive discussion on all aspects of the bilateral relationship. So they acknowledge that they are on opposing sides when it comes to the border wall, but they will discuss it further.
We're back here with Paul McNamara of GAM UK Investment Director and Fund Manager. And actually, this speaks to something that I think is important. So you don't sound very optimistic about the Trump administration. Mm-hmm. The optimists would say Trump's a deal maker. He just likes to say something far out there, and then he really enjoys getting on the other side of the table with someone, and then he hammers out a deal. And so they would point to something like this and say, yeah, it may look like he's really inflammatory towards Mexico, but he just wants to get in there and strike a deal with Peña Nieto. What do you think about that framework? Could it be that there's a method to his madness? I mean,
it could be, but I mean, this is such a tricky area because it's a red line for both Trump and for the Mexicans. You know, because Trump, every rally, you know, who's going to pay for it? You know, Mexico, it was absolutely dead center. It's very hard to walk this back. This isn't something he can say he was misunderstood about. Mm-hmm. And obviously, you know, for the Mexicans, you know, this is a president who's seen as anti-Mexican, you know, demanding that they pay for a humiliation. I mean, nobody is going to pay for that wall in Mexico and get elected.
And that's one thing that's notable.
That seems like pretty safe.
One thing that's notable is that everyone from the Mexican side says he's uniting Mexico in pushing this. Well, I want to bring you into the Bloomberg here to take a look at a chart. This is Kevin Kelly and Carlos Torres of Bloomberg Data putting it together. The Mexican bolsa is back. That's the top panel. It shows how it's climbed back to pre-election levels in peso terms. It's come off a little bit, but still, the election being the red line, it has made its way back. The bottom panel shows the valuations of the bolsa, and it's actually now cheaper as analysts revised up their earnings expectations for the next 4 quarters, and presumably that's because of a weaker currency.
Yep.
Do you touch Mexican equities right now?
Well, we do debt, but I mean, this pattern is actually very similar to the UK. If you devalue enough, your equities go up in local currency terms and go down in dollar terms. You know, that it's just an impact of the devaluation. The fact that they're cheaper on PE, I think that's the thing to take away.
Okay, it's cheaper on PE and the currency helps it, but is that reason to be more enthusiastic about the companies, whether you're buying the debt, whether you're buying the equity? I mean, does your outlook improve?
Not if you're spending dollars, because it's the value of the dividends they pay, it's the value of what you sell it for in dollars that's going to matter. And if the only reason that the price is high is because the peso is cheap, that's not a reason for a dollar-based investor to buy Mexican or British stocks.
I want to talk about Europe real quickly. You mentioned in the last segment the Breitbartization of news, the anxiety that's provoking among U.S. allies. If you look here at this chart, the French-German 10-year spread has been on the rise. People are concerned about Le Pen. From your perspective, do you see this so-called populist wave continuing across Europe?
I think it's the risk, and I think if you'd told us, 18 months ago the UK will leave the EU, that Donald Trump will be elected, we'd bet heavily against it. And I think, and for this reason, people are just very, very, no matter what the polls say, people are not willing to take it on trust that Mrs. Merkel will win, that Ms. Le Pen won't win. I mean, clearly, that would, it's got to the point where people are actually listening to see what Le Pen has to say about a new currency for France, and that's not healthy for French yields.
Extraordinary times. Paul McNamara, GAM Investment Director and Fund Manager, great to have you on set.
All right, we have some headlines here. Sean Spicer, the press secretary of the White House, says that Donald Trump will sign an executive action on extreme vetting, and he will also sign executive action on rebuilding the military. It's not clear if we're talking about executive orders or presidential memoranda. Both are executive action, but they would be on extreme vetting and rebuilding the military. And you're looking there at a live shot of the Hall of Heroes, where General Mattis will be sworn in on a ceremonial basis shortly. This is Bloomberg.
I'm Emma Chandra. Let's get to First Word News this afternoon. A US-Mexican border wall would amount to a cost of $120 per US household, assuming it isn't paid for, and would add $15 billion to US debt. That's according to the Committee for Responsible Federal Budget, who says that figure doesn't include interest and is based on the latest census data. Both the White House and the Kremlin confirm Russian President Vladimir Putin will speak by phone with President Donald Trump tomorrow. Putin congratulated Trump on his victory shortly after his election, but the Kremlin says they haven't spoken since then. The Kremlin has applauded Trump's promises to mend ties with Moscow. Russia says the next round of Syrian peace talks in Geneva will be postponed until late February. It blames continued clashes between rebel factions and al-Qaeda-linked militants. The UN-mediated talks in Switzerland had been scheduled for February 8th. Rebels fighting to remove President Bashar al-Assad declined an invitation to meet in Moscow, but several factions led an opposition delegation to the negotiating table this week in Kazakhstan. Now back to Scarlet.
Thank you so much, Emma. And we are watching Mike Pence, the Vice President, speaking at the ceremonial swearing-in of James Mattis, the Defense Secretary. Donald Trump, the President, right behind him. We do know that Sean Spicer, the White House Press Secretary, has said to everyone that the President will be signing executive action on extreme vetting as well as executive action on rebuilding the military. We will wait to see if that will be taken care of when he steps up to the lectern.
It was the most interesting moment, I thought, from the press conference today was when Trump was talking about torture, and he said, I believe that it works, that waterboarding works, and he says, but James Mattis doesn't, and I'm going to let James Mattis make the call and override my call. Interesting insight into Trump's management style, assuming that he follows through with that.
Yeah, it's a very hands-off approach and delegation, and it's interesting because we spent so much time during the Senate confirmation hearings listening for the cabinet nominees' views on different issues. And instead, what you're finding, normally the president imposes his opinion on them. Instead, you're finding that the president will listen to what his delegates have to say.
So he says for now. And there you have, once again, Mike Pence, Vice President Mike Pence, introducing James Mattis at his swearing-in ceremony at the Hall of Heroes at the Pentagon. Earlier today, President Donald Trump said he would have a, quote, fantastic relationship with UK Prime Minister Theresa May, promising to work closely on trade as her country exits the EU. Mexican billionaire Carlos Slim also weighing in on his country's growing trade tension with the U.S. Here to talk more about what trade infrastructure will look like is Ambassador Miriam Sapiro. She served in the administrations of Presidents Reagan, Bush, Clinton, and Obama, most recently as Deputy U.S. Trade Representative and Acting U.S. Trade Representative helping to craft the TPP. Miriam, thank you very much for joining us. So already an extraordinary few days on the trade front. What do you make of the actions you've seen so far?
Well, Joe, it's been quite a week. We're 1 week in now. I think the visit with Prime Minister May went very well, as both President Trump and the Prime Minister wanted it to. On the Mexico front, things didn't start off very well, and we needed a reset almost immediately. So I think it's good news today that the two presidents have spoken and put out a statement and tried to calm the waters there.
As someone who's party to the negotiations, do you take what President Trump says, whether it's about the $60 billion deficit, trade deficit that we have with Mexico, or the construction of the wall, or about the crimes that illegal immigrants commit? Do you take what he says literally or metaphorically?
Well, Scarlet, I think what we need to focus on really is finding areas where we can work with Mexico. They're one of our closest trading partners. They are our southern border. And because of the last 20 years, along with Canada, the NAFTA relationship has really integrated the three economies. And if we're not careful and we spark a trade war with Mexico, it's going to end up hurting the U.S. economy, particularly consumers and companies that want to export and continue to export to Mexico.
Miriam, do you believe that there's a way to update or revise NAFTA in a way that would be beneficial to both the U.S. and Mexico?
I do think so. You know, the TPP, the Trans-Pacific Partnership, that included both Mexico and Canada, was going to be one way of updating NAFTA, in addition to forging a really strong partnership with all of our Asia-Pacific trading allies. Unfortunately, it's on a stalemate right now. President doesn't want to do TPP. He's made that clear. So we have an opportunity now to do NAFTA and try to update it to reflect digital rules of the road, improve the labor and the environmental provisions. And I think it's important that we work with both partners to try and do that.
You are looking there at a live shot of James Mattis, the Defense Secretary, speaking at the Hall of Heroes. He was just sworn in on a ceremonial basis, and he is making some remarks. We will bring you President Trump's comments if and when he speaks. Miriam, when it comes to NAFTA, should the U.S. look to rip it up completely and start from scratch, or should it look to amend various portions of it?
I think, Scarlet, if we were to rip up NAFTA, we would be hurting ourselves more than anyone else. What's important is we sit down and we talk to both of these partners, very important trading partners. I mean, with Canada, we have the longest undefended border in the world. And again, with Mexico, it's a critical player in terms of South America, Central America, and U.S. interests. So we have to find a way to update the agreement.
I'd like to first
20 years later.
congratulate General James Mattis.
Miriam, if you could sit tight, we are going to bring you to President Trump speaking at the Pentagon.
Mattis has devoted his life to serving his country. He's a man of honor, a man of devotion, and a man of total action. He likes action. He is the right man at the right time, and he will do us all very, very proud. I'm honored to stand here today among so many patriots. You are the backbone of this country. You are the spirit of this nation in every sense. The men and women of the United States military are the greatest force for justice and peace and goodness that have ever walked the face of this earth. Your legacy exists everywhere in the world today, where people are more free, more prosperous, and more secure because of the United States of America. And you have earned and ensured for our children the glorious birthright of freedom bestowed upon us by God. We stand today in the Hall of Heroes, great heroes, a testament to the undying courage of those who wear our nation's uniform and who have received the highest distinction, the Medal of Honor. This is a sacred hall. The soul of our nation lives between these walls. These walls tell the story of those intrepid Americans who gave everything, risked everything, and fought with everything they had to save their fellow warriors, and warriors they are, believe me, warriors they are, and to save our wondrous liberties, and to save this God-blessed land. They shed their blood and poured out the love from their hearts to protect our home. We are in awe of their valor, tremendous valor, and we pledge our dedication to every single family serving our country and our flag. That is why today I am signing 2 executive actions to ensure the sacrifices of our military are supported by the actions of our government, and they will always be supported by the actions of our government, believe me. First, I'm signing an executive action to begin a great rebuilding of the armed services of the United States, developing a plan for new planes, new ships, new resources, and new tools for our men and women in uniform, and I'm very proud to be doing that. As we prepare our budget request for Congress, and I think Congress is going to be very happy to see it, our military strength will be questioned by no one, but neither will our dedication to peace. We do want peace. Secondly, I'm establishing new vetting measures to keep radical Islamic terrorists out of the United States of America. We don't want them here. We want to ensure that we are not admitting into our country the very threats our soldiers are fighting overseas. We only want to admit those into our country who will support our country and love deeply our people. We will never forget the lessons of 9/11, nor the heroes who lost their lives at the Pentagon. They were the best of us. We will honor them not only with our words, but with our actions, and that's what we're doing today. I am privileged to be here with you, and I promise that our administration will always have your back. We will always be with you. And I just want to thank you very much. I want to just extend a very special congratulations to a great man, and that's Secretary Mattis. And I think he's going to lead us so brilliantly. He's a tremendous soldier, always has been. He's a general's general. Every general that I spoke to, I won't say that they all said, he's our favorite, but they did. He's our favorite. He's a special, special man. So I want to bless him, and God bless you, and God bless America. And Secretary Mattis, I have no doubt you're going to do an outstanding job. And thank you very much for accepting this responsibility. Thank you.
And that was President Trump speaking at the Hall of Heroes at the Pentagon. He says he will be signing executive action on extreme vetting and rebuilding the military. He says the vetting measures will help keep out radical Islamic terrorists, and you can see him there at the Hall of Heroes getting ready to sign both those executive actions. The president speaking after the ceremonial swearing in of James Mattis, the new defense secretary, again at the Pentagon. In the meantime, let's return now to our guest, Ambassador Miriam Sapiro, partner and the head of Finsbury's office in Washington, a former deputy U.S. and acting trade representative. Miriam, thank you for being so patient with us. We now know that Mexico and the United States will continue to negotiate to try to figure out how they proceed on trade. They agreed to back channel effectively. What would make those back channel discussions productive?
Well, I think we have to approach the discussions with a little more respect for Mexico and the importance of the relationship that we have. I think the president signaled today that he's ready to do that. What's important, as in any negotiation, is you sit down and you assess what your interests are and what the other side's interests are, and you try to find a win-win situation. We simply try to impose our will on Mexico or any other country. There's worry that we'll end up not with a deal, but with deadlock.
What happens to the ability to have a constructive negotiation if people wake up to provocative tweets?
Well, it's funny, Joe. I mean, we were seeing a bit of ruling by Twitter, and now we've seen in the last few days diplomacy by Twitter. There's no substitute sometimes for just picking up the phone and having a discussion as the two presidents did today. And again, I think the statement that we saw that came out of that discussion is a positive sign.
Does NAFTA, as it's currently constructed, stipulate anything on security and immigration? Should it, perhaps?
Well, I think that the relationship we have with Mexico is very important and comprehensive. So it's far more than just economic. It also deals with some critical security interests. We obviously want to make sure that our border is as secure as possible. We also, though, want to make sure that we don't have instability on our southern border. So, again, a strong economic and strategic partnership with Mexico is critical for the United States. We don't want to see the Mexican economy cratering. That would not be in U.S. interests.
All right, Ambassador Miriam Sapiro, partner and the head of Finsbury's office in Washington and a former deputy U.S. and acting trade representative. Thank you so much for coming on. Great to get your perspective.
Great to be here. Thank you, Joe. Thank you, Scarlet.
And as you just heard, President Trump says he would block radical Islamic terrorists from entering the U.S. Last week, I spoke to Graham Wood, author of a new book called The Way of the Strangers, Encounters with the Islamic State. I started by asking him about the economics of ISIS.
They have their own currency. They have an Islamic State dinar, which is gold, and that allegedly is actually being used in circulation. On a day-to-day basis, they're probably using Iraqi dinars, Syrian pounds, US dollars even. But for everything they've got the idealized version of it and then the day-to-day version. And the idealized version is something minted just for them.
And how does the existence of this gold dinar fit with the sort of Orthodox Islam, the reference to Scripture? How does it fit into the overall ideology?
Most Islamic countries, even ones who are pretty fastidious about Islamic finance, don't have fiat. I mean, they have fiat currency. They don't have gold currency. The Islamic State believes this is the only way that they can actually be faithful to Scripture. They look at the example of the Prophet who used gold currency, and they say we got to do the same thing.
So when you, in your book, you talk to various sympathizers, supporters of the Islamic State, when they look at the global financial system, are there arguments simply based on Scripture, or is there a broader sort of anti-West, anti-bank aspect to their ideology when it comes to money?
You find that they both believe that there's no other way to be a proper Muslim. That is, you have to adopt the gold currency, you have to get rid of interest, and that's just what God says to do. But you can also get them to say that they think that this will just cause human flourishing, that if you want to have a society that works properly, you have to get rid of these innovations like interest, like anything that really goes beyond the 7th century of Islam.
And in a way, and this might seem like a kind of controversial point, it's part and parcel with a sort of monetary utopianism that you see in sort of all times and all places, where people argue, oh, if we only got rid of the banks, or if we only got rid of the Federal Reserve, or if we only got rid of fiat currency or physical dollar bills, that there would be a great flourishing of the economy. And that's sort of the key thing that we're missing.
They're on the same wavelength as a lot of people who believe that the world financial system is rotten and that it has to be replaced in a radical way. They just happen to believe that the radical replacement should be with one that is extremely antique, that's 1,400 years old, and that by doing that, we'll get rid of all sorts of social problems. We will have no vampire banks that are robbing us, the common people, of our goods, and that all the things that Occupy Wall Street was into in its farthest fringes were foreseen by the Prophet Muhammad.
Now, these gold dinars, they show them in some of their propaganda videos, but none have actually been seen outside of the Islamic State. Is that correct?
Yeah, to my knowledge, there are no coin collectors that have an example of
One
this.
day.
Someday we will see them, and they'll be very expensive, worth ironically far more than the actual gold that backs them. But so far the Islamic State has used it in a limited way and has limited its export on a pretty severe penalty.
Now, speaking of export, the Islamic State is not self-sufficient. They don't have all the resources they need to operate, and so they do have to interface, trade with the rest of the world. How does that work?
Yeah, there are many different types of trade that they have. There is official trade in oil, largely with the government of Syria, Bashar al-Assad's government. So they will use that in the form of trucks that will bring oil to Assad's people, and then they will be given cash in exchange. There's also, on a much smaller scale, just normal commerce, merchants going back and forth, and people who are undertaking their own economic activity, which is actually much more so than the oil revenue. How the Islamic State functions is by taking that normal economic activity and skimming off the top, taxing it.
I was just going to ask about that. So he sort of talked about the monetary policy or the idealized monetary policy of a money based on gold. What about fiscal policy? How does taxation work?
Well, they will tax people beyond a certain small amount of exclusion. You will be taxed on the income and your wealth. Part of it is taken for charitable purposes. That's a tax known in all forms of Islam as zakat. And then there's, on top of that, a kind of administrative tax that goes for the revenue of the state.
And so all of this, do they have, they cite their sort of tax policy and general fiscal policy directly from the original scripture?
They do. They look at the practices of the earliest Muslims and they try to follow it. And, these are old policies before plenty of innovations that we've seen, not just in Islamic countries, but elsewhere. And so, in effect, they end up with a flat tax, a tax on wealth, tax on income. These are particular policies that they've implemented, and we're watching to see how well they work.
And one of these sort of controversial points that is sort of at the essence of your entire book, is that contrary to people who argue this, who say, oh, the Islamic State has nothing to do with real Islam, your book, and you talk to many adherents, and you say that it does, that, I mean, it may be an extreme version of it, but that the entity is, pretty well grounded in sort of scripture.
Yeah, if you ask the 1.6 billion Muslims whether it's an extreme version of Islam, they'll certainly agree with that. And some will say that it's not part of Islam at all. But they're definitely looking at Islamic scripture, Islamic history, and the policies they're coming up with they're not just plucked out of the air. They're actually things that have precedent and that they think are both right and also the best way to organize a human society and a government.
That was Graham Wood, author of The Way of the Strangers, Encounters with the Islamic State. And I want to bring you a new post from Facebook CEO Mark Zuckerberg, just posted on his Facebook about 15 minutes ago about Donald Trump. He says, it's regarding some recent executive orders regarding immigration. He says, my great-grandparents came from Germany, Austria, and Poland. Priscilla's parents, that's his wife, were refugees from China and Vietnam. He says, like many of you, I'm concerned about the recent impact of the recent executive orders signed by Donald Trump. He says, we need to keep this country safe, but we should do that by focusing on people who actually pose a threat. Down lower, he does say some more optimistic stuff. He said he was glad to hear President Trump saying he was going to, quote, work something out for dreamers, immigrants who were brought to this country at a young age by their parents.
All right, we'll be back with more in terms of what to look for the next week's trading week. This is Bloomberg.
What do you miss? Let's look at Turkey and where inflation and unemployment have climbed to levels not seen in years. In the Bloomberg, I have a chart of the Turkish misery index, a crude measure of how bad things are. It just adds on inflation to unemployment. It's above 20, the combined measure, and you see it's rarely been higher over the last 5 years. Really shows earlier today, Fitch came out, actually I think it was during our show, coming out downgrading Fitch's credit rating on a political risk. We were talking to Paul McNamara, and he says there are tools to fix what ails Turkey, but President Erdogan is not interested in any of them.
Well, because the main tool would be to raise interest rates, and he's concluded that when you raise interest rates, that leads to higher inflation, and that means higher rates equals higher inflation. He doesn't want any of that.
It's not a view shared by many in the economic world that if you raise interest rates, you'll raise inflation. And in the meantime, the economy isn't doing very well. Inflation is already shooting higher. And so you have the Turkish central bank trying to do these half measures where they kind of are raising, but saying they're not raising, kind of for domestic political reasons, creating all sorts of problems. And as Paul said, the risk of an accident is growing in Turkey. And for investors, it's very nerve-wracking because maybe this is a sign to come of what's going to happen in developed markets. Let's hope not. A leader kind of taking unilateral action and pressuring central banks to do one thing or another. It's possible. Coming up, what you need to know to gear up for next week. This is Bloomberg.
In San Francisco.
What'd you miss? It was a record-setting week when it comes to U.S. equities, but on the day, it was kind of not that much action. Yeah, they really didn't do anything. Little change for the major indexes. In terms of next week, don't miss this. In politics, the French Socialist Party decides on its candidate on Sunday. President Trump talks with Vladimir Putin, François Hollande, and Angela Merkel this weekend. And the British House of Commons begins debate on triggering Article 50 next Tuesday.
And I'll be looking at rate decisions from the Federal Reserve, the Bank of Japan, and the Bank of England. And first jobs report during the Trump presidency is on Friday, though, of course, most of it doesn't include the 10 days in January that he was president. But watch those Fed decisions, or watch those central bank decisions, including the Fed not expected to hike, but will be interesting if they set up March.
And, of course, we get more earnings. Don't miss this. Earnings releases from Facebook, Amazon, and Apple. And this is, of course, with the Nasdaq holding near record highs. So no shortage of market catalysts for next week.
It's going to be a huge week.
That's all for What You Missed. Thanks for watching.
Have a great evening. This is Bloomberg.
I'm Courtney Collins, and you're watching Bloomberg Technology. Let's start with a check of your first word news.
President Trump says he will defer to his defense secretary's opposition to torture. Retired Marine Corps General James Mattis was officially sworn in today as the 26th U.S. Secretary of Defense. The president had said earlier he believed the harsh interrogation techniques are effective. Secretary Mattis has ordered reviews of Lockheed Martin's F-35 fighter jet and Boeing's plans to build a new Air Force One presidential aircraft. Two high-profile defense contracts heavily criticized by President Trump. Meanwhile, the president and British Prime Minister Theresa May have kicked off a new era in U.S.-UK relations. The two world leaders held a joint news conference at the White House today where they stressed the importance of the special relationship between the two countries. May is the first foreign leader to meet officially with Trump since the inauguration. She confirmed he accepted an invitation from Queen Elizabeth for a state dinner. And Trump and Mexico's Enrique Peña Nieto may have put some of their differences over the border wall behind them. They spoke today on a mutually arranged phone call for an hour. Peña Nieto called the call constructive. Trump says they held discussions on the trade deficit, drug trafficking, and the need to work together. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Courtney Collins. This is Bloomberg.
Corey Johnson, and this is Bloomberg Technology. Coming up, tech's cloud addiction, how the thirst for big data could drive $1 trillion into the sector over the next 5 years. Plus, VMware hits the ground running. We're going to break down the company's big quarter with CEO Pat Gelsinger. And as the International Space Station floats towards retirement, we're going to talk to the startup building a private space station. It's actually happening. Amazing. But first, to our lead. Well, the demand for cloud infrastructure expected to grow dramatically. In fact, there's one thing that probably connects the results of all the companies, the big tech companies, reported earnings this week. I think it's the growth in the cloud. Gartner certainly has predicted this. They think that more than $1 trillion in IT spending is going to be directly or indirectly shifted towards the cloud over the next 5 years. The company that wants at least $1 trillion of that, Microsoft, represented right here with Jordan Altoff, joins us right now, Executive VP of Worldwide Commercial Business. Glad to have you here.
Hey, thanks, Corey.
We'll have a conversation we pretended to not just have on the radio, although we did just have a great conversation on Bloomberg Radio. But I really think this is true, that we're in this really dramatic time in technology where all the big companies, particularly the hardware slingers, are losing their business of selling stuff to companies because all these companies are looking to the cloud. But your company has made this really dramatic turn where you had, maybe 15% of revenues all in this cloud business?
Yeah, so look, we're really excited about the results that we just posted. But in fact, I think what we're more excited about, frankly, is the momentum we're seeing with the Microsoft Cloud. We're on track for our $20 billion commercial run rate by FY18. And we posted $14 billion in this last announcement. And what we're seeing is from aerospace to agriculture, big companies are betting their business on the Microsoft Cloud.
Yeah, you got 95% growth in your Azure business, which is fantastic. Faster than Amazon Web Services growing. Of course, it's a smaller business, but probably number 2 by most estimates. What types of customers is Azure getting?
Well, in the last 6 months alone, we've announced major agreements with GE, Boeing, BMW, Renault Nissan, Mars, SAP, and Adobe and the like.
With the planet Mars?
No, Mars, the candy company.
Oh, the candy
yes,
company.
Exactly.
Because okay. That would be really cool.
That would have been cool, actually. Would have fit in with your space station story quite well. But no, in fact, enterprises around the world are betting their business on the Microsoft Cloud. And what we really see fueling this is digital. As companies try to reinvent themselves with cloud technologies, they're choosing Microsoft for that.
I suspect that you have a way within Microsoft of identifying. Everyone's using Microsoft in some way, whether it's their desktop software or Office or something. But how many of these are core Microsoft customers that are moving business to the cloud because they're used to using Microsoft for a lot of other things, not just desktop applications?
So we're seeing growth from all sorts of customers. Those have been traditional Microsoft customers that have come to trust our enterprise credibility over the last several decades, as well as new customers that are investing in new areas like the Internet of Things and the connectedness of artificial intelligence to reinvent their businesses. Take, for example, Land O'Lakes, which is probably most known for butter and dairy. But they actually have a $13 billion agricultural technology business now that's fueled by the Microsoft Cloud.
In terms of profitability, I mean, well, that $1 trillion number that Gartner has out there, I think it's wrong for a lot of reasons. But one of the reasons is I don't think those dollars are going to shift. I think fractions of those dollars are going to go to the cloud, and most of them will disappear. Do you guys have the same notion at Microsoft that the IT spend will not be all moved to the cloud, but those companies will be able to spend less because they go to the cloud?
Well, it's actually a pretty interesting thing to think about. I mean, we used to think about our market opportunity as the total number of PCs and data servers on the planet. But now, actually, we do look at our opportunity relative to the total addressable market for IT spend. If you think about what's actually happening in digital transformation, big companies like Boeing are betting their entire digital aviation business on the cloud, and they've moved to Microsoft Azure. They're using our AI technology so that they can better address airlines around the world more nimbly and at better scale. And so this doesn't just translate to IT cost translation. There's actually new business growth that's coming from it that we've never been able to address in the past.
So let's say I'm a Land O'Lakes or General Dynamics or a big Fortune 500 company that's thinking about where to go with my cloud business. I'm talking to AWS, which has increasingly got a sales staff now. I'm talking to Microsoft. I'm talking to IBM. I'm talking to Rackspace. Why should I go to Microsoft?
Well, it's really simple. At the end of the day, it's because of our scale, the trust and security we've built into the platform, and our enterprise credibility and experience with working customers in this space. We frankly know what it takes to be able to partner with industries around the world. Take, for example, the connected car space right now, which we think there's a lot of opportunity in. And we're not taking the tact of building cars, but rather we have major contracts with BMW, Renault Nissan, Volvo, Toyota, just about every auto manufacturer on the planet, where we are empowering their connected car strategy. And it's that ecosystem, that enterprise scale and credibility that makes Microsoft a really differentiated choice in this space.
You're faced with a dilemma of having open systems that will allow customers to move on the second they find a cheaper price or something, but customers, of course, would like to have that ability. Or having closed systems that might work a little bit better because if you've got databases that are wedded to Microsoft databases and APIs that are wedded to the Microsoft APIs. And Amazon, as some have criticized, are certainly going towards that specific API approach. What's your take on that?
Listen, we think open is the right way to go. And frankly, that's a big part of our business today. More than 2/3 of the workloads we run in Azure today are open source workloads. They're non-Microsoft workloads. But when it comes to the enterprise, again, big businesses, when they're betting the farm, when they're really thinking about how they transform, they want the trust that a Microsoft can provide in the market.
Is your business going to be bigger on Azure than Amazon Web Services 5 years from now?
That's our intent.
Good to know. Good luck with that. The battle of Redmond versus Seattle is on. Thank you very much. I really appreciate it. Jordan Althoff from Microsoft.
Hey, thanks
for your time. All right, coming up, VMware CEO is going to join us to discuss the company's latest earnings and what's behind their double-digit growth. And a reminder that all episodes of Bloomberg Technology are now live streaming on Twitter right now. At Bloomberg Tech is the handle. Bloomberg Tech TV, I should say, weekdays at 5 o'clock in New York, 2 o'clock on the West Coast. This is Bloomberg. VMware shares up more than 3% on Friday when the company reported fourth quarter results that beat the analysts' expectations. Why were the analysts wrong? We'll dig into that with revenue from the network virtualization cloud infrastructure company up 8.8%, $2.03 billion from a year before. They had new products, networking software, and demand for the core virtualization software slowing. But behind all this, VMware CEO Pat Gelsinger, well, he's going to help us break this down. Pat, always good to see you, even virtually. So when we look at this quarter, what's the sort of longer trend, if maybe even look back over the last calendar year, and where is VMware in its sort of transition to do more?
Yeah, well, thank you, Corey, and it's always great to be with you and have the chance to chat with you. This was just a really great quarter. We had good performance across all of our geos, across the new product lines. Core compute exceeded our expectations. It really was just a perfect quarter in so many dimensions. And we've really been building momentum throughout the year with multiple beat and raise quarters throughout this year. And we feel like our strategy has just resonated very well with customers, and they're getting increasingly confident with how we can enable this mobile cloud experience for them in a multi-cloud world and be part of their digital future. It really has been a good time for the company.
How is the virtualization business changing? I mean, we're talking to Microsoft about how their business is embracing cloud, how many companies are shifting workloads towards the cloud. But they're not doing it at home anymore, and so they're not all rushing out to buy VMware for their captive servers, if you will. And I wonder how your business is changing on the face of this.
Yeah, and we really think about that most people are building new workloads in the cloud. It's actually less of shifting workloads to the cloud. And their existing workloads, a lot of on-premise environment, and our estimates are 2030 until it's 50-50 cloud and on-premise. And the VMware strategy is to really be uniquely positioned across the two and enable customers increased flexibility to have a hybrid environment that really combines those two together without needing to change their application while they harness this incredible power that the public cloud is offering. And our partnerships with IBM and Amazon have really resonated in the marketplace. The growth of our vCloud Air network has been extremely well received in the marketplace. And the core on-premise products have done very well also. So we're really seeing it on both sides of our business.
What is the Amazon partnership? Describe that to me.
Well, what we announced back in October was that VMware and Amazon were coming together. Really, the leader in public combined with the leader in private cloud were coming together to have this offering of the full VMware software on the globally scalable, available Amazon footprint. And that offering really brings the best of those two worlds together. And it has just had an incredible resonance. And I'll say we've been overwhelmingly positive response from our customers, and it has increased their strategic confidence in VMware's go-forward strategy. So it really has brought the two leaders together, and we're quite excited about that. It's not available yet. It'll be in the middle of the next year, but we've already started to see customers increase their strategic commitment to VMware as a result of that announcement a couple of months ago.
Yeah, one of the things, the sort of speculation, the way that the cloud business is going to grow going forward, is that you'll have different kinds of customers going to different vendors, and that certainly there will be exceptions, but that big S&P 500 companies that are used to doing a lot of business with Microsoft are going to go to Azure, and that you're going to have the startups and the Ubers and the Airbnbs and the two guys with a dog and a computer and a PowerPoint presentation going to Amazon Web Services. And then for the heavy compute stuff, you'll see them looking to Google and maybe IBM. I wonder how you see that playing out from your standpoint.
Yeah, we really think that there will be a multi-cloud future. And it's not just different kinds of customers, but different kinds of workloads as well. You just had Microsoft on. Hey, my Office 365, I'll get that from Microsoft Cloud. My new app development, I'll want that from Amazon. Maybe Google and some of their big data services will be the best place. And in many cases, regulatory, cost-driven, latency, my IoT factory will be on-premise. It's a multi-cloud future. And VMware's strategy is to give the software, the management, networking, and tools that our customers can take advantage of all of them. And they really have the ability to say, we're going to have the best of cloud. And just like VMware gave customers flexibility of their server and compute franchises in the past, we'll give them flexibility and control of their cloud services in the future. And that strategy is resonating very well with customers.
So I will bet you had an eyebrow raised when you saw the price being paid for AppDynamics, which even on a generous projection of revenue growth, which was strong, was probably 10 times next year's revenues. And I wonder what you make of that kind of valuation on a company that's in your space.
Yeah, I was a bit startled by the acquisition. That said, we see Cisco as a company that's an important partner for us in many domains. AppDynamics is really mostly complementary to us at the app layer versus us at the infrastructure layer. And I think overall, it's everybody is saying, this tech opportunity is moving beyond traditional IT. And for that, tech is breaking out of tech. And it's in the digital future, every business and every aspect of every business becomes a technology opportunity. So we believe we're coming into a period of accelerated growth for tech overall. And we're quite excited about that opportunity. And VMware is really uniquely positioned to benefit from it.
But I would imagine you've got to think that some of these unicorn companies are overvalued and that we might see one or so blow up in the next year.
Well, I think that, we went through a major adjustment in valuations early last year. And valuations, there haven't been that many IPOs, M&A activity. There's been a steady stream of that, but not crazy amounts of it going forward. So I don't think it's been a particularly overheated market. This was, I say, surprising at the valuation that was paid for it. VMware has a tremendously positive track record. We've used M&A strategically. We've been a disciplined buyer, and I think what's really differentiated us in the M&A market is that of the acquired companies, we've had extraordinary success rate of the companies we've brought in, and we're going to continue to use M&A as an important part of our strategy.
All right, the prices are getting higher, though. VMware CEO Pat Gelsinger, glad to have you on. Thank you so much, Pat. Really appreciate it. All right, now to a stock that we're watching right now, Juniper Networks. The company's sinking as much as 10% on Friday, the second worst tech performer in the S&P 500. The network equipment maker, of course, gave a weak outlook to its latest earnings report. Investors are focused on gross margin and operating expense forecasts, but also product design. News accelerating the sell-off. It's been going on really since the start of the month. $1 billion in market cap for Juniper wiped out. All right, coming up, Jack Ma's Ant Financial made its second U.S. deal to buy a money transfer service called MoneyGram. But why payments? We're going to uncover some secret pain points in the payment business. This is Bloomberg. So this week we saw two payment companies make big bets, or two companies make big bets in the payment industry. Jack Ma's Ant Financial stepping up its international expansion by buying U.S. money transfer service MoneyGram. And Airbnb also looking to amp up its expertise in the payment business with looking at Tilt. To talk more about these companies' payment focus and the industry as a whole, Brad Garlinghouse, the CEO of Ripple, and in New York, Bloomberg Gadfly columnist Tim Culpin. Brad, let me ask you, do you see a connection between these two companies coming together, or these four companies coming together?
I think there's no question there's a connection, and part of it is simply represented by the complexity of our payments infrastructure today. And this, I don't mean this just for these two companies, I mean this for everybody. You see Airbnb, and again, purportedly, it hasn't been confirmed, they're talking about spending $10 to $20 million to solve their payments problem, where they have a traveler, a guest in Australia, paying in Australian dollars, being hosted by a host in the UK in British pounds, enabling that payment, collecting the payment, dispersing the payment. That's actually a very complicated thing to do because our global infrastructure is so slow and has an error rate that can approach 10%.
Is this the same kind of thing Ripple's trying to do?
For sure. Ripple's view of the world is, why can't value move the way information moves today? We can stream video from the surface of Mars, but I can't get money to London in the next 3 or 4 days.